After a pretty tense week in the markets, there is one huge question on everybody's mind.
You have to ask, is the big market rally that we've all been watching finally hitting a wall? You know, after last week's major pullback, we're really at a critical tipping point. And honestly, the answer could be decided in just the next 5 days.
The market is truly at a crossroads. There's no other way to put it. And this week, there are 5 key events that are going to act like signposts, telling us exactly which direction we're headed. So let's break them down one by one.
Okay, first up, let's just talk about the technical health of the market itself. This is all about that raw, fundamental battle between the buyers who are trying to push prices up and the sellers who are trying to drag them down.
So here's the deal. The big indexes, the S&P 500 and the NASDAQ, they took a pretty decent hit last week. But, and this is a big but, a late-day rally on Friday brought them right back to a super important technical level. It's a real line in the sand. And that line in the sand, it's called the 50-day moving average. Now, I know that sounds super technical, but the idea is actually really simple and, for traders, incredibly powerful. All it is the market's average closing price over the last 50 days. Think of it like a floor. When prices fall to this line, traders watch to see if buyers will step in and defend it. And that is exactly where we are right now.
And this really lays out the 2 potential paths forward perfectly. On one hand, if the market bounces higher from here, well, that's a great sign. It signals this was just a healthy little pullback and the rally is back on. But if we break below that floor, that could mean a much more serious correction is just getting started and the sellers have taken control. The stakes this week are just incredibly high.
All right, number 2. This is arguably the single most important piece of economic data for the week: inflation. This number has a massive, massive influence on the Federal Reserve, and as we all know, what the Fed does affects pretty much everyone's wallet.
Get this. Right now, the market is betting there's a 60% chance that the Federal Reserve will actually cut interest rates in December. I mean, that is a huge deal.
But that entire 60% bet, it all comes down to Thursday's inflation report, the Consumer Price Index, or CPI. Is the data going to show inflation is finally cooling off, which would confirm what the market is hoping for? Or is it going to come in hot and just shatter those expectations?
And it's so important to look inside the report, not just at the big headline number. We've got to watch the core reading, which strips out those volatile food and energy prices. And we need to keep a really close eye on the cost for housing and services, because that is what the Fed is obsessing over right now.
Okay, let's pivot a little bit. We're going to move from that big macro picture to what's happening inside individual companies. This week, we're getting a really crucial health check on some major US corporations. So we're watching 2 companies in particular that act as these fantastic economic barometers. First, you've got Disney. Their results give us a great read on consumer spending. Are people still paying for trips and entertainment? And of course, we'll be watching those Disney Plus subscriber numbers. Then on the other side of the coin, you have Cisco. They give us a clear view into whether big businesses are still spending money on essential tech or if they're starting to tighten their belts.
Now let's zoom out a bit and broaden our view beyond just the US, because as we know, no market is an island. This week, we're going to get a real feel for the global economic pulse from some major international players.
We're watching 3 really important international companies. Sea Limited gives us a fantastic window into e-commerce and gaming over in Southeast Asia. New Holdings offers a great look at the fintech boom in Latin America. And of course, JD.com tells us a lot about the health of the Chinese consumer. You put them all together, and they help paint a much bigger picture of the global economy.
All right, our final point this week. This one deals with the very foundation of the market, U.S. government debt. This week, we get a major test of investor confidence, and it's all complicated by what's happening or not happening in Washington.
So, the U.S. government borrows money by auctioning off bonds. This week, there are 2 huge auctions, one for 10-year bonds and another for 30-year bonds. The results are going to show us exactly how much demand there is from global investors for U.S. debt. Weak demand could be a major red flag, especially with all this uncertainty from a potential government shutdown.
And this brings us to what might be the most intense day of the entire week. Just look at this timeline for Thursday. At 8:30 in the morning, that critical inflation data drops. Then just a few hours later, the US Treasury has to try and sell billions of dollars in 30-year bonds. You can bet that whatever that morning inflation number is, it's going to directly impact how many people show up for that auction. It's a fascinating and really high-stakes connection to watch unfold.
So let's just do a quick recap.
Here's your watch list. You've got the big technical test. Can the market hold that 50-day moving average? You've got Thursday's make-or-break inflation report. We're watching consumer health through Disney. We're checking the global pulse with international tech earnings. And finally, we're gauging investor confidence with those Treasury auctions. Each one is a crucial piece of this week's puzzle.
It all comes back to this one fundamental question. We have a market perched on a knife's edge, with all these massive events on the horizon. When the dust finally settles at the end of the week, will the buyers have retaken control, or will the sellers finally break through that line in the sand? We're about to find out.